Hello my friends, this is the video that I made on natural gas prices on August 11, about 2 weeks ago, when the price of this asset was at $2.143. And my main assumption at this very point was that we potentially about to hit the top of the internal first wave, and we have to see the retracement. And when this retracement happens, we will be able to add to the long position. And by the way, on the video before my previous video, I caught this bottom to the tick. I told you that you could enter your long position with anticipation of the movement to the upside. And you can watch my previous video right here. You can watch the entire playlist of these videos right here at the very first link. And this was already the profitable trade. But take a look right here. We were at this point, we had quite tiny movements around the level of about $2.16. Then, right now, we have this pure retracement, and we might see the trend continuation in the upcoming week. So, guys, this is another evidence of the power of technical analysis. And if you want to know more about technical analysis, if you want to enhance your trading skills, feel free to subscribe to my YouTube channel and to join my Patreon account, where for the $35 a month you will be able to drastically enhance your trading skills. On top of that, for the first 100 subscribers I will do a giveaway. I will do a technical analysis based on your request on any asset that you might find. On top of that, guys, and it is the most lucrative offer, for now there is not so many people inside the Discord group. That is why almost 100% of my time will be dedicated to you. And it is pretty much one-on-one training for the value of $450 a month, but for the fraction of this cost, for just $35 a month. And I think it is quite fair deal.
I got the cash in the bag, stadium packed, born a rock star in this life, gonna live it up on.
So guys, and let's take a look on its bigger picture. Let's zoom out a little bit, and let's take a look that from this bottom that was established on in the middle of February of this year, we potentially have this as our first wave, second, third, fourth, and we are about to see the next leg to the upside that should have again 5-wave structure on it. And to be honest, guys, I don't like this structure at all, because it is some kind of diagonal. We have an overlapping of the fourth wave on the territory of the first one. That is why we cannot rely on the much higher price targets for the top of the fifth wave. But at the same time, guys, this structure is quite technical, and in just several minutes in my technical analysis, I will show you what I'm talking about. And for now, let's take a look on some fundamental news. We are on tradingeconomics.com, and let me show you the most recent update in regards to the natural gas price. US natural gas futures dropped over 5%, nearing $2 per MMBTU after the Energy Information Administration reported a larger than expected storage increase. US utilities added 35 billion cubic feet of natural gas to storage for the week ending August 16, surpassing market expectations of a 27 billion cubic feet increase. This build pushed storage levels 12.6% above the 5-year average, reflecting an ongoing supply surplus. In response, major producers like EQT and Coterra Energy are reducing output and delaying projects to better manage the excess supply. Looking ahead, analysts anticipate that this surplus will lead to lower customer prices for natural gas this winter, driven by strategic stockpiling efforts. And guys, I have to say that it is not the most bullish forecast, but we have this forecast for the winter, and we are in the last month of summer. That is why, in my opinion, we have all the chances to hit higher targets with the next leg. And that is why, guys, let's continue with the technical analysis. But before we dive deep right here, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So guys, let's zoom into the most recent price action, and let me show you the breakdown. Potentially, we have completed the first internal wave to the upside. Let me show you like this. From this bottom, we might have, this is our first wave. This is the retracement to the second one. This is the third. This is the fourth. And this is the top of the fifth wave. So we've completed this 5-wave structure. Let me zoom in even more. And right here, take a look right here. We have A, B, and C. And potentially we've completed the ABC correction. But let me show you on a smaller scale what do we have in these waves. Let me zoom in even more. And you know that A wave should have a structure of 3 or 5 waves. We have 1, 2, 3 waves in it. B wave should have a strictly 3 waves in it. And let me show you. We have 1, 2, and 3 waves right here. And from this top, we have to have 5-wave structure in it. And let me show you like this. C wave, you know that should have 5 waves in it. This might be the first wave. Second, 1, 2, 3, 4, 5. This might be the third. Potentially, we might have another leg to the upside and another leg to the downside that should complete the 5th wave. And guys, you are witnessing the fact that despite the ABC correction that on the first glance was completed, potentially we have left another tiny leg to the downside. And if this happens, we will have at least double bottom pattern, and then we might have the movement to the upside. And from this top, if I pull the Fib retracement tool, let me do it like this. From this top, if I pull the Fib retracement tool to the top of, from this bottom, sorry, to this top, to the end of the 5th wave, we hit and we pretty much broke with this tiny margin. We broke the golden pocket range, and technically it is not the best sign because we had a very good reaction out of this range right here on August 22nd, but we had to have a couple of more legs to the downside to complete the structure, and we have at least one more leg. And the bottom of our 5th leg might land all the way down to $1.97. And if it happens, you will be able to add to your long position with the stop loss slightly below this bottom, or with the stop loss slightly below the 0.786 level at $1.97 mark. Why it is so important? Let me explain you why. 0.76 level is the last level with quite decent percentage, with a quite decent possibility of the trend reversal. Definitely we have not more than 30% of the probability of trend reversal from this range. And if the price action breaks this range, we have not more than 10 to 15% to see the trend reversal from somewhere lower ranges. That is why, guys, if you want to enter your position and if you are risky enough, you have to put your stop loss either at the range of about, let's put it this way, $1.95 or $1.883, which implies from our current price, if you are about to accumulate your position to the downside, to the first range of to the first stop loss order about 3.33%, and to the second one about 7.25%. At the same time, guys, we might have, let me show you like this. Let me delete this tool, I don't need it anymore. If I pull the Fib extension tool from the bottom to the top and to the bottom of the retracement, depending on the trend reversal point, and we might land at, let's put it this way, somewhere at $1.972, we have to see the third wave that should land at least at 1.618 extension, and it is about $2.7 mark, somewhere at this range, which implies from the entry point, let me show you like this, something of about 35% of upside potential. And in this case, the risk to reward threshold becomes quite lucrative, and that is how the technical analysis works, and that is how you can benefit out of its movement. So I think that's all information that I want to provide you. If you like my video, please hit the like button and subscribe to my channel with the notification bell, and see you guys and girls next time. Bye!
I got the cash in the bag, stadium packed. Born a rock star in this life, gonna live it up on the attack. Baby, I'm bad, I just wanna get caught up in this life. I'm crazy, I'm mad, doing no cap. Only God wants you.